Drew, let me begin with you. We're looking at futures this morning, slightly lower after the markets had a very strong day on Friday following Jay Powell. A lot of enthusiasm about possible rate cuts. Why do you think futures are pulling back right now?
Look, it was a big move. We're already at, I would say, extended valuation circumstances. I really don't want to get into traditional PEs in that. But look, there's a lot of good news priced into this market. The macro backdrop tells us we can hold, I would say, 22 times comfortably, but we're trading at almost 25 times. I think in that environment, investors are happy to take profits when they can. I think a big move on Friday gives you a chance to take some profits, rotate into some underperformers, and then kind of get back to trading this morning.
James, coming over to you right now. What do you think about the tech trade? So we saw on Friday, we saw the momentum trade underperform. We saw the broadening trade. That really led everything with the S&P equal weight outperforming the market cap weighted index. A lot of that is because we saw other sectors outperforming consumer discretionary. Where do you see tech going from now, at least until Nvidia reports?
Yeah, I'd echo that sentiment. I mean, valuations are clearly stretched, as we see it across the board. Tech continues to be the one area of the market where you are continuing to see earnings results performing on par or better than expectations. But at the end of the day, we are seeing that the degree of those beats, the magnitude of those beats, are starting to diminish versus what we saw a quarter ago and last year. So, you're seeing an uptick in estimates, but you've seen, 20 to 25% expansion in valuations in a lot of these names in tech across the board. So, we continue to like tech. We think that there's a lot of winners in tech, but it'll increasingly be, securities selection driven versus, we think, the broader indices because, things have run a lot, and it's going to take a lot to keep the multiple expanding from here. And as we have uncertainty as it relates to, how much the upsides or earnings are, because the current status of the economy, despite the dovish tone from the Fed, we're just not sure, what's going to cave first, the economy or inflation. So, you just got to be vigilant.
All right, got to be vigilant. Drew, coming back over to you. I think everybody's trying to figure out where they want to put money to work this week. Again, at least up until Nvidia earnings, which could be a big inflection point for the market. We had Jefferies come out with a note today saying that the mid-cap 400 is a great place to put money to work. I'm looking at the chart. Year to date, certainly underperforming, only up about 4.5%. And on Friday, we actually saw the small caps outperform everything else. We didn't show it over there. Where would you put money to work? What part of the market? Is it about going down cap, or is it about looking at some of those unloved sectors?
So it's funny, not all in down cap. If I was going to go down cap, I might look at financials and industrials down cap. So still very selective. Honestly, we're in the same camp. Yeah, Fed rate cuts good for down cap, but we don't think we have the all clear on the economy yet. What we do like is outside of AI, which I think you still should be a holder of your AI names in your portfolio. You should be looking at some themes like fintech, again, plays to financials that doesn't have, I would say, perfection priced in, and wearable technology, which gets you a lot of healthcare names outside of insurance and biotech. This is really interesting because in both of those cases, earnings estimates have held in there, even though we've seen estimates outside of growth actually come down. So, Frank, to answer your question, fintech, wearable tech, and then be selective down cap. We're not all in on mid and small yet.
All right, James, coming over to you. What are your expectations for these Nvidia earnings? We saw on Friday on Fast Money, we had one of the traders say that the options market is implying about a 6% move to the upside or downside after Nvidia earnings. Nvidia is about 8% of the S&P. So there's a lot riding on these earnings report. First and foremost, if Nvidia meets the estimates, is that good enough? And how big of a, if it's not, how big of a beat does it need to have to keep this, tech-fueled rally going?
Well, I think it's a lot also going to determine based off of the color commentary as it relates to China and their expectations there, and also as it relates to the gross margin. We've seen the gross margin come down as Blackwell has ramped up. So you got to have confidence that the gross margin will be sustained at an attractive level and improve from there. I think that numbers, are expected to be blockbuster across the board, north of 50% revenue and EPS growth, but that's also down from triple-digit growth from last year. So growth rates are coming down, for Nvidia is no exception to that. I think that color commentary is going to be a big deal, but at the end of the day, you got to see, an attractive third quarter fiscal 2026 guide to keep the momentum in the stock, because right now it's north of 40 times earnings, north of 20 times sales. It's not the highest valuation it's ever been, but it's certainly toward that higher end. And a lot of things need to go right. And they're the biggest cap right now, the biggest weight right now in all the indices across the board. So goes Nvidia, so goes the market. So a lot of things need to go right. I mean, we're there. We continue to be in Nvidia, but we're about 25% of the weight of what it is in the S&P right now.
Drew, I'm going to give you a last word. It's hard to look past Nvidia, but coming up later this week, we also have a PCE report. We already heard from Jerome Powell. He believes it's going to come in at about 2.9%. So how much of an inflection point is that potentially? It's after Nvidia, and we have other inflation reports and, of course, jobs reports coming up before that Fed rate cut.
Yeah, it's funny. I actually think the jobs report, broader economic data, and honestly, the Q3 earnings reports outside of growth are probably going to be more important to the market than that PCE number. I think we're pretty comfortable with the Fed rate cut is coming up, but it's again, back to you need the economy, you need both for the broadening trade to really play out.